Looking to diversify your portfolio with real estate but don't want the burden of property management? Real estate investment trusts could be the perfect solution. REITs allow you to invest in income-producing real estate without the headaches of being a landlord. In this video, we will explore some of the top REITs across different sectors, helping you find the real estate investments that align with your financial goals. With that being said, let's dive right in. Number 1, Simon Property Group. Simon Property Group, a prominent real estate investment trust specializing in shopping malls, has been steadily recovering over the past year. During this period, its stock has gained approximately 32%, showing a positive momentum in the market. For investors interested in REITs, Simon Property Group offers an attractive 5.4% annual dividend income relative to the share price. This yield is considered moderately priced compared to other investments, making Simon Property shares appealing to those looking for income from their investments. In addition to its attractive yield, Simon Property Group has demonstrated a solid performance in the first quarter of the year. This strong showing provides a promising foundation for future growth and stability in its share value. For REIT investors, a solid track record of performance and consistent dividends are key factors you need to evaluate for potential investments. Now, the company upgraded its full-year forecast, anticipating that its funds from operations per share for 2024 will be between $12.75 and $12.90. This is an increase from previous estimates of $11.85 to $12.10 per share. These positive financial indicators suggest that Simon Property is on a solid financial path. Additionally, Simon Property Group is branching out into mixed-use real estate. This means they are creating properties that include places to live, work, and have fun all in one area. By doing this, Simon Property Group hopes to attract a wider variety of tenants and customers, which can increase their income and overall success. Number 2, American Tower. American Tower is a real estate investment trust that focuses on managing a vast portfolio of wireless communications and broadcast towers. In fact, it has the largest independent collection of such towers globally. This specialization makes it a pivotal player in supporting the infrastructure needed for mobile communication networks. Investing in American Tower offers a dividend yield of 3.2%, which makes it attractive to investors seeking income. Beyond dividends, the company is strategically positioned to capitalize on the ongoing, widespread growth in the mobile data demand. As more people and devices connect to mobile networks, the need for robust infrastructure, like the towers American Tower operates, continues to rise. One of the main strengths of American Tower is its strategy to expand its tower assets beyond the United States, moving into international markets, where mobile usage is growing quickly, so the company can tap into new sources of revenue. This global approach helps American Tower take advantage for the increasing demand for mobile data around the world, setting it apart from competitors that only focus on the US market. In the first quarter of the year, American Tower reported strong financial results, even though many tower providers were facing tough conditions. Despite these challenges, the company showed resilience and managed to do well. Looking forward, the market is expected to improve in the coming quarters. This means that American Tower will have more opportunities to use its extensive network of towers and continue growing. Number 3, Realty Income Corp. Realty Income Corp, known by its ticker symbol O, is a major player in the real estate investment trust market, specifically focused on retail properties. This company owns, develops, and manages retail real estate across the United States, with a special emphasis on single-tenant buildings. What sets Realty Income apart is its status as the largest triple net REIT in the country. In a triple net lease arrangement, tenants are responsible for covering all property-related expenses, including real estate taxes, maintenance, and building insurance. This structure benefits Realty Income by providing a steady stream of income with fewer financial responsibilities on their end. One of the most attractive aspects of investing in Realty Income is its dividend yield, which stands at 5.7%. This means that shareholders receive a big return on their investment through regular dividend payments. Unlike many other companies that distribute dividends quarterly or annually, Realty Income pays its dividends monthly. This consistent income stream can be particularly appealing for investors looking for reliable and frequent payouts. In addition to its operations in the United States, Realty Income has been expanding its portfolio by acquiring properties in Europe. Interestingly, the capitalization rates, or the expected return on investment, for these European acquisitions are higher than those for the US properties. This suggests that Realty Income sees greater potential for profitable investments in the European market, which could enhance its overall growth and income potential. If you're enjoying this video, hit that like button, subscribe, and turn on notifications for more valuable content. Number 4. Crown Castle Inc. Crown Castle is a real estate investment trust that focuses on owning and managing wireless communication towers. These towers are essential for mobile carriers to provide their services, making Crown Castle a key player in the telecommunications infrastructure sector. One of the standout features of Crown Castle is its dividend, which currently is 6%. This is the highest dividend yield on our list, making it a much more attractive option for any investor looking for steady income. In recent times, investments from mobile carriers in new towers have been relatively low. Despite this, Crown Castle has seen a big increase in revenue from its small cell networks. Small cells are tiny versions of cell towers that help improve phone and internet coverage in busy city areas. The increase in small cell revenue has balanced out the slower growth in the traditional large cell towers, helping Crown Castle continue to grow and succeed. With a new CEO leading the way, Crown Castle has a bright future, especially in its fiber optic cable business. Fiber optic cables are essential for fast internet and data services. Whether Crown Castle decides to keep its fiber business or sell part of it, investors will benefit. If the company keeps its fiber assets, it can continue to make money from this segment. If it decides to sell, it could bring in a lot of money and provide a good return to shareholders. Number 5. Extra Space Storage Inc. Extra Space Storage is one of the largest publicly traded self-storage real estate investment trusts, and it offers a dividend yield of 4.4%. This means that for every $100 you invest in Extra Space Storage, you can expect to receive $4.40 in dividends annually. This is a very attractive investment option. Even if the demand for self-storage remains low in the coming years, Extra Space Storage has proven it can still do well. The company's management team has been very good at handling tough market conditions, making sure most of their storage units are rented out. By the end of the first quarter, Extra Space Storage had a same-store occupancy rate of 93.3%. This is important because it's an increase of 0.8% from the previous quarter and 0.6% from the same time last year. A higher occupancy rate means the company makes steady money, which is great news for investors. Extra Space Storage is also well positioned to continue growing and gaining market share from smaller competitors. In the self-storage industry, having a larger scale allows for better management, more efficient operations, and stronger marketing capabilities. This competitive advantage helps Extra Space Storage attract more customers and keep their units rented out, even when the overall demand is not growing rapidly. Because of these factors, Extra Space Storage presents itself as a strong investment option. The company's ability to maintain high occupancy rates, coupled with its competitive edge in gaining market share, makes it a reliable choice for investors. Whether you're looking for steady income through dividends or a stable company with growth potential, Extra Space Storage is worth considering. Number 6. Public Storage. Public Storage is the biggest company in the United States that owns self-storage facilities, places where people can rent spaces to store their belongings. One of the attractive aspects for investors is that Public Storage offers a dividend yield of 4.3%, which means it pays out a good portion of its profits to its shareholders in the form of dividends. In 2024, the demand for self-storage units was lower than usual, which has affected rental prices in many areas. However, this decrease in demand isn't severe. Public Storage expects that the demand will slowly start to pick up again over the rest of the year. This means that while the company has seen a dip in how much it can charge for storage units, it's not expecting this trend to last forever. Besides just renting out storage units, Public Storage also runs a profitable insurance business. The business provides insurance for the items people store in their units, adding another stream of revenue to the company. This makes public storage more strong and able to earn money in different ways, not just through rental income. One of the strengths of the self-storage industry is that it tends to do well even during tough economic times. When the economy is bad and people are downsizing or moving, they often need storage space. This means that self-storage companies like Public Storage are less likely to suffer during a recession, which reduces the overall risk of the company and its investors. Number 7. Equity Residential Properties Trust. Equity Residential is a company that focuses on owning and managing a wide range of apartment properties. It's known as a multifamily residential REIT, which means it specializes in investing in rental apartments and earning income from them. One attractive feature of Equity Residential for investors is its dividend yield of 4.1%, which is considered quite good, offering steady income to investors. This year, Equity Residential's stock has performed exceptionally well. When you include the dividends, the stock has gone up by 8.4% through June 4. This makes it one of the top performers among the REITs on our list, indicating strong growth and investor confidence in the company. One of the reasons for this strong performance is the high occupancy rate of their properties. In the first quarter, Equity Residential reported a same-store occupancy rate of 96.3%, which means that 96.3% of their available apartments were rented out. This rate slightly increases to 96.4% in April, showing a consistent demand for their apartments. The second quarter of the year is typically when the company sees the highest percentage of lease renewals. This trend suggests that Equity Residential's positive momentum could continue throughout the year. If this pattern holds, the company might exceed its expected rate of growth of 2.6% in 2024. This would mean that rents could increase more than anticipated, boosting the company's revenue and, potentially, its stock performance further. The REITs we've discussed offer a range of options from diversified portfolios to focused sector exposure. Remember to research thoroughly before making any investment decisions. Which REIT company piqued your interest? Share your thoughts below in the comments section, and don't forget to like and subscribe for more valuable content.